sense.
And Chris always said that he eventually wanted to get his real estate license and then transition to real estate at some point.
That's either
And
because he had a really great experience and got
he
inspired
could
by
do
it,
better.
or it was a terrible experience. He's like, I got to clean up this industry. Like, I
Yeah.
got to come in and make a difference.
I got to
There's an
show him how to do
opportunity.
it the right way.
Yeah, exactly.
So Chris went and got his license. How long ago was it?
About
though?
a year and a half
About
ago, a little
yeah,
over.
yeah, about a year and a half ago. But then he made a really big decision this year that he was going to go full time into real estate. And I'm really excited about that. Man, he is messing around with our website for the first time in years and years, and I can't wait to release it. And we started some really good campaigns up north. We're doing a campaign called Buy NYC, Buy FLA,
Okay.
but it's BYE NYC,
I like that.
BUY FLA.
Very nice.
Bye New York, hello Florida. So
That's clever.
Yeah,
That's
so
the
we're
URL.
Yep,
that is
yep,
the
we
domain.
bought it.
Yep.
Buy NYC, buy FLA.
Yep. Now we don't have that up yet, but it'll be up soon. And it's going to be basically at first, eventually that's going to be a collector for all the people that don't live in Florida about how to buy down here. So you're going to be involved in that too. You don't even know it yet. But also
it's actually a good area of mystery. Like when I'm relocating, but I need a loan, how's that work?
Yeah.
Right. Because
exactly.
it's mostly like, what's your income going to look like? That's
well, not just
something a
that.
lot
Are
of
you
people don't
moving
think
down?
about.
Are you changing your job? Are you moving down here? Are you working anymore? You
Yeah,
know,
like
there's a
when I
lot
say
of things.
income, I mean all that.
Oh,
like,
yeah.
Is your income coming with you, or are you starting over? Like, what's the plan?
Yeah.
It's a stressful situation. I've relocated multiple times through corporate America. I spent 20 years in living all over the country, and it's having a resource to help out is paramount. So yeah.
Oh yeah. When I moved down here.
Hold on 1 second. Somebody's saying they can't hear us.
Yeah, it should be good now.
Oh,
We
you're
should be
good? Okay, cool.
And Chris, if I could bother you to just get the microphone a little closer to your mouth.
I thought I had it close
Rookie.
enough.
You rookie.
Couldn't hear us. All right, so you need to start over, Jim.
Yeah. Okay.
Ready?
Hey, it's the stuff.
Yeah. Good morning, everybody.
So Chris, you were talking about how stressful it can be, and a lot of twists and turns when you're trying to sell and buy at the same time.
Yeah, it's nervous. I mean, you're hesitant a little bit to put an offer on buying a place until your place is like secured, and it's never the place that you're selling is secured, and it's never fully secured until the last hour, right?
Mhm.
And so it's a difficult position to navigate, but it's definitely not for the faint of heart. But that's why Jim helped me out immensely in all of that. And for my situation too, when I sold my house in Hallandale, the closing took a little bit longer than anticipated. There were a couple of issues that popped up, nothing major, but having Jim's expertise there really helped out to smooth that over. And then I ended up being homeless for about a month. Maybe.
Oh my God! He's
no,
exposing
it wasn't
everything.
it was not Jim's fault at all. It was me being probably overly picky about the house that I wanted to buy, and then I finally found it. And so yeah, I lived out of friends' houses for a couple weeks. It's all good though.
One of the other things that we're going to be doing with Chris very soon is we're going to start a separate podcast only on YouTube, not on the radio. It's going to be called the Florida Collective.
Florida Luxury
Collective. And we're going to be doing a podcast where we're going to be focusing more on the luxury market down here and everything. It's just such a hot market. You can't ignore it.
Yep.
So we're going to actually like more focus on that for that whole segment. We're going to be doing the podcast out of a studio that Chris created at his house. You're going to be coming over there once in a while. And Jimothy might end up coming there as a producer at some point once we get this thing going. So I'm really excited about the Florida Luxury Collective too. And we got a lot to, I'm really excited about Chris's career. When he came to me, I was, when you came this year, Chris, I had already made a decision at the end of last year that, well, actually the spring of the year before, that I was going to crack up my whole team, keep Nancy. And I was like, I'm just going to be a single agent for a while. I want to use my systems, see if they work, tweak them, get everybody involved. And Chris is like, well, I want to go to the brokerage you're at. And he lives kind of far from our brokerage. And I'm like, well, I'll definitely help you and give you advice and everything. But he was like, I really want to be in the brokerage you are. And I was like, okay. And Chris has worked so hard. I was just like, I have to bring him on and do this. So I'm really looking forward to having a partnership with you, Chris. So thank you so much.
Yeah, no, glad to
Yeah.
be part of the team.
And one of the things I haven't told you this, I'm telling you live on air, but one of the things I was talking to Nancy about a couple of days ago is one of the things that Chris is really good at compared to all the agents. You know, I've had so many agents come through my door and as a trainer and things like that. You're very good at doing research, Chris. Excellent on understand the MLS and finding stuff. Way better than most of the agents that come. Everybody's got their strengths and weaknesses.
Yeah.
But one of Chris's strong traits is really knowing what the inventory is out there and really picking good properties.
I mean, I guess one of the things that when you're interviewing your buyer's agent is something like, how are you going to help me find the house that I want, right? And so a lot of that, Jim, is just agents can plug parameters into MLS, and then the active listings go out, right? But how often is your agent kind of doing what you're doing, which is looking at the active listings, going through the pictures, trying to identify the features that are important to you, and kind of like really, so you get this list of homes that meet your criteria, but then within that list, there's some evaluation that needs to happen. And so that's what I found with Chris. I know that he's doing that with his clients, right?
Mhm.
He's like just really trying to zero in on what they're looking for. And sometimes maybe like mirroring your own search, like you're pretty particular about what you want. And it's not just about price. There's a lot of features that are important. So you have to have an agent who's willing to put that work in to make your experience, especially if you're on deadlines. You know, if you're like, you got a lease coming up or something like that. So.
I mean, I take the same approach when I've bought, I've bought numerous houses for myself over the years. And so I take the same approach where I'm really looking at, trying to find that, I don't want to call it a diamond in the rough, but one of those properties that is maybe under the radar a little bit because the photos on the MLS are poor, or it's just, for whatever reason, somebody was afraid by it. Those are the ones that I love the most. So
Yeah.
I dig deep into the properties out there and really find those hidden gems.
The other thing that Chris is going to be specializing in, and I've watched him do this for himself, and it's going to be really good, is ocean area condos down in Hollywood and in that area in Broward County. Chris, one of the places that you bought was a fixer-upper right on the beach.
Yeah.
That was for personal use, and got a really good deal on it, I think.
Took a long time, but yeah.
It did. You really scoured that area. Now you know it really, really well.
Mhm.
So you're already finding people that are in your sphere of influence who have seen what you've done. It's like, hey, I want to do that too. And now you're going to be helping them find great condos on the beach.
Absolutely.
Down there.
People are shocked at what you can afford on the beach. And we've had friends come by and they love the place. And it's like, hey, help me find one.
You bought right on the beach. I mean, toes in the sand, walking out your door,
100
toes in the sand.
100 steps to toes
100
in the
steps
sand.
away.
Wow.
And it was, I'm going to start, I don't want to tell the real price, but I just want to show how
No,
crazy
it's fine.
this is. So was it above or below 500,000?
Below.
Was it above or below 400,000?
Below.
Was it above or below 300,000?
Below.
Crazy, right?
Wow.
On the beach, 100 steps from the beach.
Ask
Under
me
300.
the next question.
Was it below 200,000?
No, but it wasn't very high above that.
Right. So
Wow.
low twos,
Wow.
low
That's
twos,
incredible.
toes in the sand, right? And your HOA isn't crazy high. Your condo
No,
fee
it's
isn't
like
crazy high,
$650 a month.
right?
Yeah.
And you don't have any assessments coming up anytime
No,
soon because we checked that.
We bought it right as the assessments were more or less done. So the building was just completing all of its 50-year recertification work. So the previous owner paid $90,000 in assessments prior to us buying the property.
And we've talked about that also a lot in the kind of the condo market really got hit with
Mhm.
the enforcement of the existing statutes as far as making sure they're properly budgeting for long-term capital expenses, that they're doing these long-term inspections for safety and soundness. But also insurance kind of hit them. So they got a double whammy of kind of catching up on what they've kicked the can down the road. And then also insurance was just going through the roof. And
Yep.
so the condo market was tough, right? Because those costs, those HOA fees or condo fees were going way up. But part of that was special assessments, right? To pay for these big projects. And then maybe they were going to come back down or at least stabilize. So it sounds like you got that exact scenario, right? You got in after the big hit and after it stabilized.
Really hit the timing right on it too, because if you factor in the 90K of special assessments that the previous owner paid, that means got into the condo for well under $200,000, which
Yeah.
is unheard of. Those are, and fast forward, that was about a year ago that all happened, and so it spent a lot of my money and time fixing it up, but it's essentially done.
Is it rent? Did you do it like long-term rental, short-term rental, or is it just a vacation home for you?
No, right now it's so you have to own it for 2 years before you can rent out in this particular community, and they restrict the number of rentals. It can be a maximum of 3 months, and it can only be 3 times out of the year. So it's really it's designed for the snowbird type community. So it was purchased primarily as a personal use.
Yep.
Just because that's the ocean's my happy place. So I'm a water guy.
Yeah, that is so awesome. And this is just a perfect example, Chris, of what you were doing. That if somebody was from out of state and they were coming to buy, hey, I want a inexpensive beachfront place, and you don't do all that vetting about what's happening with the community itself as far as the regulations to comply with the state, they can get burned really, really bad.
Yeah.
So if you're thinking about buying down here, you got to call us. We'll get you over to Chris for sure. Now, Chris is already working. We're going to do a shout out right now. Chris is already working with one customer out on the road, showing properties and stuff, although he has a whole bunch of people coming up soon. But I wanted to give a shout out to Liesel and Albert. They're first-time home buyers. They came to us through their Liesel's parents, Greg and Diane. Greg and Diane, if you're listening today, I'm sorry we played phone tag all week because we called each other back and forth. I promise to call you after the show when I'm driving over to Lake Okeechobee, because I got a little time while I'm driving to call somebody, as long as the cell service works out there. But
it's not that far from here. Just beeline.
Yeah, but it's still a
shot.
Good 55 minutes to get there. So I have plenty of time to give them a call. And then Lisa and Albert, they came, they were thinking about doing a rental. And then Chris interviewed with them and talked about all their options, and then said, you might be a good candidate to buy if you'd like. So they switched gears. This all happened within a few days, right?
Literally within a week. Over the course of a week, they found out that they needed to get out of their current rental property unexpectedly. And we jumped on the phone real quick, got things going, and within a couple of days, their mindset really pivoted to looking to buy. They wanted to purchase a place several years ago, but it just didn't work out for them now. And so we've been very busy and active this week, looking at a variety of different properties.
Yeah, and you only went out. I think you only went out 2 times. Right.
Third, and then one more property.
Okay, so third time.
Yep.
So they went out 3 times. They probably looked at a handful of properties. Now they had 2 candidates that they really liked a lot. And after the show, me and Mike and Chris are going to talk about the best way to structure an offer, to turn in an offer. So I got my fingers crossed for them that everything's going to work out well.
Yeah, and it's really it's a good example of, like, if you're in that spot and you're trying to decide, is renting our next move or is buying our next move, one of the challenges people get a little bit stuck on is the cash.
Absolutely.
Like how much money you need. And I think that was their biggest unknown. Like, can we even do this? And so Chris and I talked a couple times, and he was able to convince them that a conversation at the very least was in order, right? 10-15 minute initial conversation. And we had a really great conversation. I kind of took them through the process, made them feel comfortable with what we're trying to do. And the question of, where's the money coming from? Well, it's like, okay, how much money are we going to need? And then let's figure out. And you guys have some, and maybe we can get some here. We can try and get some here. And maybe you're negotiating a contract where you get some from the seller. And so it just, I think for them, the possibilities opened up. Right. They understood, wait a second, we can actually we can actually do this. And it's not going to take that much more money than if we were getting a rental unit with, first last security or some version of that. So almost the same amount of money that they're going to have to bring to the table to get it done. So there's a lot of people out there like that. And sometimes it's not the cash. Maybe it's a credit concern. Maybe there's questions. Well, I'm self-employed, or, my income's does this work? I'm commissioned or bonus, whatever it is. So if you want to think about being a home buyer, even, you got to talk to me, right? Or talk to some mortgage professional and just kind of see where you stand. And you might be green light, like this case, green light across the board, right?
Mhm.
There was no red flags. There was no yellow flags even.
Well, and I think too, what a lot of people don't think through is you really, when making a decision to buy something, that's the first step, right? There's a lot of logistics involved in it. And, I'm going to use the condo as the example, right? I had very strict, money threshold on what I was willing to spend or able to spend. I couldn't, and so it took time, right? So you kind of have to think of this as a process, right? The first step always starts with the lending side of it to understand where you're at, because just going through that, you have to adjust, I guess, what maybe the property that you want to buy or the location that you want to buy. It's a little bit of a roller coaster in some ways, and not in a bad way, in a fun way, right? You got to go through all of those ebbs and flows, and so the sooner you start, the better it is really the thing.
Yeah, a lot of times in this process, there's like, I'll call it a rubber meets the road moment,
Mhm.
where you realize, here's the payment, not only the payment that I qualify for, but the payment that I'm comfortable with, like from a budget perspective. And then what price point does that put me in? Right. So if I want to be no more than $3,000 a month on my house, on my mortgage payment, well, that's going to put you into a certain price zone. And it's not about, you have to be able to analyze those numbers and realize, okay, this is the price point we're at. This is the inventory. Chris, you, Jim, would help. Like, here's what's out there that's meeting your criteria. And then, of course, I provide the tools to kind of crunch numbers and access the thing. I know that Albert has been pretty active using the tool. I can kind of see when he's in there. I know, Chris, you're probably in there
Yep.
looking at the numbers as well. So, yeah, it's a really good example of how it can go. Somebody who's into, not sure, to, oh, we have possibilities, to, wow, we're really finding homes that kind of are checking our boxes.
I don't know how other agents, when they're working with buyers, do this, but I'm closing a couple of deals right now as the listing agent and working with some of the buyers agents. Some of them really on top of their game and great, but a couple of them, they just hire, like, they have a connection to a mortgage person like I have with you, Mike, but then they don't really talk to them or have any real conversations. And they're kind of like, well, they're going to do their thing, and I'm just going to rely and hope that they are able to close it out. And you call them up and you ask them questions about what's going on with the mortgage or things, and they really don't have that connection that we have,
Mhm.
like with Mike Rauch from the mortgage firm. And it really makes a big difference that you communicate with the mortgage person all the time. And each deal you're thinking about turning an offer in. Sometimes it isn't crystal clear that if you could have, like, if you have a $3,000 a month mortgage payment and that comes out to, I'm just making it up, 400,000 a year or something like that, whatever it comes out to. That isn't really true that it's 400,000 a year, because there's a lot of factors. How much is the taxes? How much are the insurance? Is there an HOA or condo fee involved? All of that stuff. And if your realtor isn't talking to a mortgage broker about all that, you could be turning in an offer that you really can't afford, and then you don't find out until too late after you spent money.
Well, it's not even that too. It's also having the conversation with those different levers with the buyers themselves, because there's a lot of, not everybody buys multiple homes in their life, right? So they don't know what they don't know, and that's where all of the different levers that impact the monthly payment, because that's what people care about most often is, I can pay this amount per month, and there's so many different ways that number can change drastically quickly without knowing.
It's so true.
From the time, Jim, I got into this business, even up to now, the kind of the default pre-approval is the results of your pre-approval are here's a pre-approval letter for $400,000, right? And they kind of send you on your way, give that to your agent, and you're out there shopping for homes at 400 or less. And when you're qualifying for a mortgage, you're not qualifying for a price,
Mhm.
right? You're not even qualifying for a loan amount. You're qualifying for a monthly payment. That's like your limit. You have a maximum qualifying payment based on a debt to income ratio, although that's not the only way to qualify. That's the traditional, conforming loan, FHA, conventional, VA loans. You qualify for a monthly payment. And like Chris said, most people think about their budget in that way. Like when I talk to people, I'll say, have you thought about like, what's your limit? I'm going to set my limit. I'm going to have a number. I want my number to be as high as possible. And that's not because I want you to go crazy with your budget, but I want you in control of like where you're drawing that line or where you're pumping the brakes. And if you have to stretch the budget a little bit to get into the perfect house, you can make that decision, right? So that's what I want for people. But there's like this, if you're walking around with that $400,000 letter that was issued 2 weeks ago, and you're about to go make an offer on a house for $379, and you send them a $400,000 letter to go along with that offer, it's like, if you're a listing agent and you see that come through, like you're looking at pre-approval letters and you're scrutinizing them for certain, like, I don't know if you look at the date. I imagine you do.
I
don't know if you look at the sales price and does it match your offer? Is it higher or is it lower? And so you're a savvy agent. And so you're going to see something like that and you're going to say, okay, well, now I want to talk to your lender, right? You might want to talk to the lender anyway.
I always talk to the lender.
And then when you call that lender who issued the pre-approval letter at $400,000 a month ago, like, do they know anything about the deal? Do they know anything about these clients? Right. So it's not a good way to be successful. Now you can be successful. You may be limiting yourself. You might be able to buy a $415,000 home, right? And land at the same payment as the $400,000 neighbor next door. Or you might not be able to be that or buy that $375,000 home next door because the taxes are crazy, or there's an insurance situation where you're just never going to get a reasonable insurance policy. So, or, it's just, I've never done it any other way. And it always like boggled my mind how people would, be in there and not even know that they're qualifying for a payment. They think it's a purchase price. So.
Yeah, it really is. That's what most buyers just focus on purchase price, not mortgage payment. You had to beat it into my head because I was still built that way when you came onto the show 10 years ago. And how many times I've asked you, just give me the price, Mike.
Right.
Just give me the price.
Because you guys have to set up a search based on an upper price point, right? And so when I say, oh, they're fine, Jim, they're good for $3,200 a month, it doesn't mean anything to you. So that's
right.
And even in my brain, I have to kind of like figure out where that's going to land us, the price point. And I have tools that I use to kind of give us a zone.
That Quick Qual app is pretty good, right, Chris?
Oh, absolutely.
Isn't that a great
it's
thing?
A valuable tool for clients and ourselves just to make those on the fly assessments for sure.
It's so great. And the other thing that's great, 24/7, as long as you get approved in that app, because the app's based on your numbers as the buyer, not just a generic, this is what houses cost. Mike could be on vacation. He could be sleeping. He could just be blowing us off for no reason. That
you mean doing my normal?
Yeah, doing normal Mike stuff. If that happens, I don't have to call Mike. I just go into that app. I punch in all the numbers as long as the numbers are accurate, and it gives me an approval.
Exactly.
I print it out. So we never give, hey, we're good for 500,000 and we're turning in 475. We never do that. Whatever the purchase price that we're turning in for the offer, that's what the approval letter's for. And then that way, it's just one more little detail to make sure to give the buyer an edge to not have a tougher negotiation with the seller. Now, you still might get that counter, but at least the seller doesn't know
it's kind of like
that you have extra.
Yeah, especially because a lot of people, like for example, Albert and Liesl, they're from a payment perspective, they're qualified way higher than where they want to land. And so if I spit out a generic pre-approval for them based on that, they're out there shopping, at 600,000 or with a $600,000 letter, but they're looking for $350,000 home. Like how crazy would that be?
Yeah,
but that's kind of like the case with it goes that way sometimes.
Yeah, and agents, some agents actually think that's a good thing because it shows I can afford the house, and I'm like, that's not really a good thing. Don't do that.
No.
Yeah, you're strong.
Yeah,
it could be. I mean, well, maybe
the better way to do that is to say in the email with the offer is explain who the mortgage firm is and who Mike Rauch is, and also explain how long we've been working with them and that we've never had a problem in the 10 years that we've been together. And there's no reason why this one isn't going to close either. And here's Mike Rauch's number, and please call him if you have any questions about the strength of the buyer's credit to close. And then Mike will just get on the phone and tell him. And Mike goes through everything before you get the loan. So he doesn't wait to see if you got the house first to go through everything to get the loan. He gives us He does all the stuff up front and then gives us a letter. That's why I was saying having the approval letter from Mike from the mortgage firm specifically is like having a cashier's check in your back pocket walking around, and you know you're good for the money. It's just now you just got to figure out the house that you want. It takes a lot of stress away because there is a lot of stress with buyers and anxiety. Am I going to get the loan? Once you're in contract, even, am I going to get this loan? Am I going to make it? Am I going to make it through?
Certain buyers, and I think rightfully so, and understandably so, are just nervous about, even as much as you assure. And I tell people, like, please don't lose any sleep over this particular thing that we're looking for. Like, this is just what we need to get the loan approved. We're closing, right? This is not a problem. We're closing, but people will lose sleep over that stuff just because it's until you've signed on the close day. Like,
it's a natural human.
It's not done.
It's a natural human emotion, to have that fear, right? I think it just comes naturally, especially the first time that you go through that process.
I remember when I first moved down here to Florida. I was in 2005, so that loan environment was easy peasy to get a loan, and so I wasn't stressed at all because I just had no idea that I was doing something unusual. I was buying new construction in Florida, relocating from Virginia down to Florida. Didn't really talk. I talked to a loan guy like a year before we did this thing, and then I called him up, as we're in contract, 15 days from closing. It's like, hey, here's our close date, and he's like, wait, what? Huh? But within a matter of, a couple days, he had me fully underwritten and approved. Why? Because it was one of those type of loans that was possible. Right?
And just make it clear, when Mike moved down, he was in a completely different industry. So he had no real estate experience at all.
Yes.
And that was your first home, right, Mike?
Second home.
Oh, it was yours. That's right, because you had one up there. I forgot about that. Yeah. Hey, we're going to go ahead and take a break right now. And because I'm Jimmy D and not Johnny C, I haven't really gone over the shout outs. I have 2 shout outs that Mike is connected to. Oh, we got a caller.
I'll screen that when we go to break.
Are you sure?
Yeah, it just
okay.
Went to hold.
Okay, cool. So, will they hold?
Yeah.
Okay, cool. So here's the thing I wanted to tell everybody is that Mike has 2 really good shout out stories that I want to bring up. Just shows the depth of knowledge and also what the difference is working with Mike instead of working with other lenders. And we're going to talk about that. And then we're going to get into a little bit of creepy critters before we get into the meat of the show.
And then we're going to have a segment of
creepy critters.
Did you work up that the sound for the new segment? Guess what's happening?
Oh,
no,
what's happening?
We haven't finalized that.
I guess we won't have one of those segments.
Yeah, and then you got to tell me what it is on the thing. Bank 2. What did they used to say? Bank and what? When you had the 2 numbers for that 360 thing.
Oh, yeah.
What is it? Bank and something?
Yeah. Well, it's
Bank
a
5, number 2. Yeah, we need to have one of those for guess what's happening.
Sure.
We invented this new segment last week, and Johnny was voicing it. So he was doing a guess, right?
Well,
so he's not here. We can't do the segment.
We can't do it. So on the flip side, the first thing we're going to do is take the caller. Then we're going to do shout outs. Then we're going to do creepy critters. And then we're going to get into some meaty stuff that's going to be very good. We're going to be talking about understanding how to use the money that we just talked about. What happens when you get all this down payment assistance money and seller credits and Smart Start? What do you do with all that money, and can you just use it for anything? And Mike's going to give us a very detailed primer on that, because 3 times of our last buyers, and I think maybe 4, because I think there was one that we didn't work with, where Mike had to spend a lot of time trying to figure out where to spend all the money because he had too much. And I love that when my buyers have too much money from other people's money too much. So we're going to get onto that on the flip side.
All right. Well, you heard the man, and that's what we're going to be talking about after this break right here on Real Radio 92.1 and 101.7 on the Treasure Coast.
We're everywhere you need to be. Find your favorite show at realradio921.com. Real Radio weather.
I'm meteorologist Charlotte Carl with CBS 12 News. Heat and humidity continue to remain a big story through your Saturday afternoon. Feels like summertime out there, but we're not necessarily seeing that summertime shower activity quite yet. A few spotty showers in the forecast this afternoon. Tomorrow, a few more storms after lunchtime.
This report is sponsored by Mattress Firm. Ready to upgrade to the perfect sleep setup? Let Mattress Firm sleep experts guide you to the perfect bed at the Memorial Day sale. Top brands, ideal comfort, score unbeatable deals on both. Mattress Firm. They make sleep Easy.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
You're listening to Real Radio 92.1, and we are an iHeart radio station. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's right. This is Jimmy D. Johnny C is out enjoying a very good deserved vacation retreat. I hope he enjoys it and he has a great time. We've got Chris Peterson from the Florida Home Pros with Keller Williams Innovations. How you doing, Chris?
Doing great. Good morning, everyone.
Good morning. We got Mike Rauch from the mortgage firm, the mortgage guy in South Florida.
Yeah, thank you.
And we've got Jimmy, of course, the extraordinary producer extraordinaire. I want to say it that
I
way.
like that. The
So,
extraordinary producer
extraordinary.
Nice. I like
Yeah.
that.
Yeah, you like
Redundancy
it?
there.
Yeah.
From the Department of Redundancy Department.
Yeah, that's it.
Yeah.
Perfect.
So I wanted to start out with some shout outs. Mike has done, Mike is always really low key about his shout outs. The only shout outs we ever hear from Mike is when I give shout outs about the buyers that we work with for Mike. But Mike works with other mortgage brokers. Yes, he does cheat. I mean, other realtors. Yes, he does cheat on me. Joking.
That's why I have to keep it low key, Joe.
Yeah, there
There's
you
rules
go.
in this game.
But some of the stuff he does, is pretty amazing. So one of the things that I was happy to hear yesterday that I didn't know, we were selling a townhome in Green Acres just about a month and a half ago, And we had a buyer come in and they had a VA loan, and that house qualified for Mike's Smart Start program. So we really wanted to take that person's offer, but we wanted them to go to Mike because they were asking for seller concessions. So we wanted him to go to Mike because Mike's company was offering $15,000 lender credit. We're not going to get into that subject yet, Mike, but the lender credit. So we wanted him to switch over to Mike, and they were like, "No, I like our lender, the one that I've already selected, because they specialize in VA and blah, blah, blah." And everything was very nice. We weren't arguing with each other, but we really tried to get him over to Mike. And we were like, Mike is an expert on VA. He might not have the advertising, say, I do VA, or have a VA name, kind of VA mortgage name. There's a bunch of companies out there, and they're not really connected with the federal government or the armed services. They just
have specialized and then sold it
and sold it like,
advertised it.
yeah. And they almost make it look like they're part of they're not, but they almost make it look like they're part of the military service or something, in a way, like a connection there.
Yeah.
And it really isn't. It's just a company who said, we decided that's our niche and we want to go for it. But Mike, he really goes deep and really knows these programs well. Who would have known that you could buy multiple houses with VA financing, right? I never knew that, right? Mike knows all this different stuff that you're able to do. But anyway, so this guy came over, and I think his name is Pedro, right?
Yeah, and he had already been pre-approved and was happy with that situation. But there were two things that kind of triggered him to at least have a conversation with me. One of them was Smart Start. So it was a national company who had pre-approved him, not based in Florida, which is a key piece of information as well. But they don't have access to Smart Start. That was number one. The other big one is they didn't have access to the down payment assistance programs, and in this case, especially Hometown Heroes. And so he was very conscious, like he's doing a VA loan. One of the big advantages to a VA loan is you can do 100% financing or 0% down. And a lot of people think, well, veterans don't have any money. No, some veterans have a lot of money. They just take advantage. Like they just borrow because they want to keep their money working for them.
And deservedly so. Thank you for your service.
Absolutely. Yeah.
Yeah.
And, but that national lender didn't have access to Hometown Heroes. So even if Smart Start, and this is why I was able to retain him as a customer, is because he didn't end up buying that home. He ended up buying something else that wasn't Smart Start eligible, but we solved his cash crunch problem with Hometown Heroes.
Right?
Yeah.
Isn't that awesome?
Yeah.
Now, I didn't know that, Mike. So if you went to like the Scud Missile Company.
Yes.
Okay, I'm not saying real companies. But if
Missile
you went
Mortgage?
To yeah, Scud Missile Mortgage. If you did the Scud Missile Company, can they use the Hometown Heroes?
There's some restrictions there. So I would say you have to be a Florida-based lender.
So you can't be like a nationally based and then work in every state.
Yeah. Now if you have like branches open in Florida or something like that. So I don't know all the intricacies of the rules. I just know that one couldn't, and I'm pretty sure the Scud Missile Company also can't.
Yeah, and that's pretty interesting because I didn't know about that. I just learned that this week. So that's another thing to explain to buyers. You're missing out, by going to these big national companies sometimes.
And you wouldn't even know because it's not if I can't do it, I'm not talking about. How can I talk about stuff that I don't have access to as far as programs or whatever? So you could go through the whole process, and if nobody is talking to you or through the grapevine, you're hearing about down payment assistance programs, and we talk about it a lot because it really makes a difference for buyers, especially first-time home buyers, where cash is just a big challenge. It's a big challenge.
And wasn't that guy self-employed or something?
No.
Oh, he wasn't self-employed. That was a different person I'm thinking about. But congratulations, Pedro, for closing on your first home. Thank you for
Friday.
using.
Shout out.
Yeah, that's awesome. And thank you for using Mike Rauch from the mortgage firm. And that was one where they were not going to use Mike, and then they saw the light and they said, "Hey, this is really the guy." So people, and this is just another great example of what makes Mike different than just not all mortgage brokers. And I know Mike's a loan originator, which is different, but it's the same kind of thing. They're getting you the loan. So they're not all the same. They might all be trained the same and have the same license, but they're not all the same. So when you're thinking about shopping around, you got to call Mike.
I was gonna say, even after it wasn't just because of Smart Start or Hometown Heroes. I mean, those things helped bring him over and like even to start the conversation. But what I find usually is when I have a conversation with potential buyers, it's a different style of conversation than what they've had with
Mhm.
any other lender they've worked with. And some of the, they have made getting pre-approved for a loan very streamlined and straightforward. You can go online to something, you could type in a bunch of stuff and it's going to spit you out a letter.
It's
That's
like the
good.
cookie cutter loan.
Yeah, and it's like maybe that works. Maybe it works. You might get lucky, but there's so much nuance. There's just so much rules that you have to know and little things that you just have no idea are important. But somebody who's operates in this world and is geared towards success and not right. The goal isn't the pre-approval. The goal isn't a contract. What's the goal? You got to
Close.
get to the closing.
I want the keys to the
gotta be able
house.
to close. If
I
you
want the
can't close,
keys.
and like, what are you doing?
Yeah.
And there's just a lot of things that you need expertise, especially if there's, stickiness in the or hair, I guess, hair on the deal. Right?
Yeah.
And it certainly helps when you're local, right? Yeah.
Yeah, I mean,
You know?
local knowledge, local
Mhm.
agents, relationships with
Exactly.
local. I mean, Jim, we had the family several weeks back who closed, who were just so thoroughly impressed with the team that you had put together, because whenever they had something come up, you had an answer for them, or you had a professional to send them to, or you were able to very easily facilitate the solution or exploring solutions. And so, like that local
Yeah, like
squad,
Makes all the difference.
and
Yeah.
sometimes I don't even know the contacts I have. I actually had to do a chimney inspection. I've never done that before for a
Mm.
1926 house.
did you call? What's the character?
Oh yeah, the Dick Van Dyke. I don't
Yeah.
know what his name. I don't know the character's name.
Ooh,
In
do you?
what was
Mary
the
Poppins.
Mary Poppins?
Oh.
Yeah, the chimney sweeper.
Okay.
Right.
Yes.
But yeah. So I mean, I didn't know that I could find. I didn't know I had somebody in my database that could help deal with
Chimney.
100-year-old chimney and see if it's in good shape or not. It was, thank God. But yeah, so that's the first shout out. But here's the second shout out, and this is my buyers, Doug and Stephanie. Stephanie's the school teacher, God bless her. Palm Beach County school teacher. They were trying to buy a home. They were very tight on their budget. We were able to find a home, but we couldn't use the Hometown Heroes program, even though that she's a school teacher. And the Hometown Heroes program, for everybody who doesn't know, because we've mentioned a couple times now today, is a down payment assistance program specifically designed for like teachers, firefighters, police officers, law enforcement, certain types of medical professions that can get up to 5% of the loan value that they're getting back to help pay for their closing costs and prepaid. If it's more than that, Mike, we'll talk about that in a second, okay? Because we're going to go in the whole subject. But they weren't, Stephanie and Doug were not able to use the Hometown Heroes when I started with them, even when we went into contract, because the money ran out, right, Mike? Is that why they couldn't use it at the time?
Yeah. So essentially, I don't know how long it's been now since there's been no funding, but it's probably going on 2 months, I would say, or
I
maybe
would
a little
think
bit
so,
over
yep.
2 months.
Mm-hmm.
Where so Hometown Heroes is the reason it is special is because it's the best of the DPA programs for two reasons. Number one, it's usually the most money. So at 5% of your loan amount, the standard one is $10,000. So if you're at anything above $300,000 on your loan amount, you're getting more money than you would under the standard program. That's one benefit. The other benefit, Jim, is that the interest rate on the Hometown Heroes program is always lower than the other programs, and I would say lower than market rates. So there's some sort of incentive built in there where the rate is lower at no cost to the buyer. So if you're eligible for Hometown Heroes, you got to use it.
Definitely.
Right. And unfortunately, the timing for them, they just got into it a little bit too late. And of course, Hometown Heroes was only funded $50 million for 2025 to 2026 fiscal year.
Yep.
And
they ran
they
out.
restricted it to the professions, back down to the just what
Mhm.
you might consider your heroes, your teachers, your medical, your police, your fire, military, which actually made the money stretch out a lot longer than it did the prior year.
Mm-hmm.
But they ran into it. And
They
so we
ran
were
out.
waiting for fallout funding, essentially. And I've had a good sense that there would be fallout funding available to them. And then, Jim, I don't know if you remember when we got this house,
Mm-hmm.
it was, and it is Smart Start eligible. Hometown Heroes was something we had to keep kind of on the back burner as if funding becomes available, we might switch into that. But we had an opportunity to do a conventional setup with them, not FHA, not Hometown Heroes, and it was going to be beneficial for them. There was another community lending initiative that we were stacking on top of our Smart Start incentive. Now it didn't work out because of a couple different factors. Then we switched back to it, and we were going to go with 10,000 DPA unless Hometown Heroes became available, which it hasn't. There hasn't been a single week where they have announced fallout funding.
And Mike has a secret way to get the money anyway. He's not going to tell me either. He goes, I got people. I don't like, really, Mike.
Yeah,
but that's awesome.
Mike has a guy.
Yeah, Mike got a guy.
So we actually were able to get them reserved with Hometown Heroes, and she is a teacher, and she's like of the deserving professions. Like we all know that these teachers in Palm Beach who finally got a raise. Finally, after I think 10 years, right?
It's been a long time.
They kind of have had these weird negotiations, and I don't know if they're completely happy with the raise that they got. I don't know, like percentage wise, but they got something. They got a raise finally. Go teachers! Thank you. But yeah, very deserving, and so that's closing. Hopefully Monday.
Yeah, Monday. I was going to say, do we have clear to close yet? Or you're not sure.
It's not clear to close, but it's like in the pipe to be clear to close. It's just this will all happen on Monday very quickly if it's happening.
Without getting too personal about a specific situation, can you tell me how much money down payment assistance they're getting from that program? Like roughly, is it more
for Hometown Heroes?
Yeah, it's more than the. Is it more than the 10,000 for the down payment, normal down payment assistance?
So yeah, it's 16-ish,
right?
16, 17.
Right. Did you stack it with anything, or you're just using Hometown?
Yep,
okay, we'll get into that later.
But so it's 5%. Yeah, it's 5% of their loan amount essentially.
So two really great examples of why you should go to Mike Rauch from the mortgage firm.
I think I said earlier 300,000. I meant 200,000. So if you're buying a home or your loan amount's over 200,000, Hometown Heroes is going to be more money than the standard $10,000 program.
Right. You have to be at over 200,000 in order to be better.
To get more than
get
more than the 10,000.
Yep.
Yeah.
So
I'm good at math.
And that's not difficult.
No.
No. Palm Beach County, you don't have to worry about that too much. Well, congratulations to Stephanie and Doug and to Pedro, and thank you for using Mike and using part of this team. It's awesome that you did that. I hope that agent starts using you all the time, the one that worked with Pedro. I hope she starts.
I think so. And she even, I think she had, most agents have some lender connection, either maybe like at their office. A lot of brokerage offices, real estate brokers will have an in-house. They used to call it in-house, but basically somebody who is in the office. And it's hard to break through that relationship sometimes. But when you get a very smooth process and everything goes like according to plan and everybody's happy and you answer your phone and you text back and you're involved, that can make a difference. And so, yeah, it's usually hopefully the beginning of a long-term relationship with that agent.
You know what else makes a difference too is when things don't go smooth and there are bumps in the road and you have the right people that can get around those humps and figure out what is the best program. That also is a big tool that I know you and Jim and Chris and this whole Florida Talk Real Estate team has.
There's a lot of work that has to happen up front, and then there's a lot of work even from contract to close. And sometimes that's the hardest work for the agent because you've done these initial negotiations and then you have inspections, and then so there's work on the agent side that happens that kind of goes maybe underseen. It's not quite so visible, but also in the mortgage world, there's always a lot of work that's happening, and it's important work, right? Because it's critical.
I mean, the real work starts once you put in the offer. I mean, that's where you just don't know what you're going to encounter, and I think that's the risk that a lot of buyers take. Of not having the right agent with the right team, because you don't know what can happen. You can get these, the rug pulled out from you on any instant. So. Yeah, experience is
and it can be disheartening at some level if you're making offers. And Jim, we recently had one where you've showed a lot of homes, had several contracts where they didn't get their contract accepted for whatever reason, and it's hard to keep going, especially if you're on deadlines and you have to make a decision like what's next for me. We're running short on time, so you really need somebody who's like sharp and on their toes and ready for the potential, I want to say battle, but the path forward. Sometimes you'll come across some bumps. So good point, Jimmy.
Well, I have a issue. My creepy critter story is not allowing me to get into it because I don't have a subscription to Florida Today. So I was able to read it yesterday, but now it's blocked me from today. So I can't do the creepy critters story.
These what used to be like your business, Jim. So you were in the news, right? You were a reporter.
Yep.
And that industry always you paid for the paper, right? That's how they made money and advertising in the paper. Do you pay for any online news subscriptions? I don't pay for a single one.
Yeah, so I used to because I cared about newspaper industry so much.
You wanted to support the industry.
Yeah, I ended up having subscriptions to the Post and the Sentinel. But the Sentinel's Sentinel subscription service is actually the Palm Beach Post too. They're both so poor that I just recently, like in the last year, canceled both of them.
Poor quality or poor they don't have money.
You'll pay a monthly fee and you can't log into their thing, and they say you don't have a subscription. It's just a total mess,
poor
right?
Infrastructure.
Yeah. And then they deliver a newspaper to one of my relatives' homes for like 3 years now. She doesn't have a subscription. They're just throwing it on the curb. And we used to do that with the Sentinel when I was a newspaper reporter from 87 to 2005. And you know why newspapers did that? It increases their circulation.
Sure.
Right? So they could say, hey, we delivered X amount of people. They don't have to say they have subscriptions because you're just dumping the paper on their front yard. Yeah, they're padding
I thought maybe they're giving you a freebie so that you might want to subscribe.
They do that, but when things get tight in the industry, 87 to 2005 was actually a golden age for newspaper industry across the country. I was so blessed to be a journalist during that time. The newspapers on Sunday, one of my journalism professors up at University of Florida, he actually weighed the Gainesville Sun, back in the late 80s, early 90s. It was either 6 pounds or 9 pounds, the paper, right? Because it was so thick, full of ads, right? And then, of course, once internet came, that all got blown out. Got blown out.
I mean, I'm young enough to remember, or old enough to, what am I trying to say? But the Sunday paper was kind of an event.
Yeah, I would
right?
sit down for 2 hours. I would sit down for 2 hours and just relax, have a cup of coffee and just read everything and really felt like I knew what was going on. I have no connection to what's going on in this community anymore. South Florida. I do because I read a lot, but I don't read a lot of local news. And then when I see that Palm Beach Post and it's a 1/4 inch thick and I'm like, really?
There's so much
news happening out there, and this is what you're giving me to tell me.
Yeah.
And most of it's like the Palm Beach Post, I think, is owned by USA Today or something now. And a lot of the bylines are from all over the country. There's very little local news happening. Both the papers went union. So now there's a guild, a writers guild for the Palm Beach Post and the Sun Sentinel. I would never want to work in a union as a newspaper reporter.
Why is that?
Well, when you work on a story and if there's a deadline and your day ends, like you work, let's say the morning shift, and you're not done with your story and it's 5 o'clock and you're supposed to leave, you're not allowed to finish the story. They bring in whoever the news shift person is at the 5 o'clock shift, and they take over the story and then they rewrite it as they want and everything.
Yeah.
And if you try to stay, the shop stewards will get mad because you're working without being paid, and that hurts the union. I'm like, I don't want to deal with any of that junk. I just want to go out there and report and tell people what's going on.
That seems
in
pretty
the world.
extreme. That's really happening?
Yeah, yeah.
Wow.
So the journalists had to form the union. I'm not even against the unions in this fact. They need something to go up against these corporate bosses like Bezos. Like, how much has he destroyed the Washington Post? He just stripped out so many people and so much out of there. And, he came in like he was going to be the white knight, in shining armor and save the journalism industry and everything. And now he's just another one of those guys sucking it dry. So I'm not a really big fan of the local news, and it's very, very sad to me. I mean, very sad.
Yeah.
And
Has it become just bad news? Like instead of news, we just all we get is bad news.
I don't even know because I don't
Yeah.
read the papers anymore, and I don't even go online to look at the Palm Beach Post and Sentinel. I took the apps out of my phone.
Because you'd have to pay for it.
Well, actually, I think I'm paying for one of the papers still. And trying to call them to try to deal with it is like next
Can't
to
get 'em on the phone.
impossible. It's almost like a scam.
Mhm.
And anyway, it's just so sad because South Florida used to be in around 1990-ish. The Wall Street Journal came out with a report about strongest news, um, the strongest news coverage everywhere in the country. And the number one market for news was not New York, and it was not Washington, D.C., which I would have thought Washington, D.C., New York, that's where all the action is. It was South Florida. They considered this to be the strongest, most competitive news market back then during the gravy days, because we had the Miami Herald, which won a gazillion Pulitzer Prizes. We had the Palm Beach Post, which was a really big, feisty paper, really kind of keeping a watchdog of what's happening with the government. We had the Sun Sentinel, which was kind of in the middle between the two papers, but it was huge and it had a huge following. I think we had over 500,000 circulation for Daily Sunday, which was huge back then. And so then we also had like 3 radio stations that were really hardcore news, WJNO, WIOD. They were like really strong in news. Then you had TV, and you had and also we had also a little paper that was kind of feisty, was the Boca Raton News right back then. And then you had all the radio stations I think I just mentioned, right? I just mentioned radio.
Yep, JNO.
And then you had TV. You had Channel 5, Channel 12, Channel 25, right? So they said that our market was the most competitive in the whole country, like in order to get news out there. And I love that. I ate that up with a spoon. It was very competitive. You go out to scenes and it looked like a national news conference. There were so many journalists there,
Wow.
going to the conference or the big rec or the big news story. It was really amazing. And then I just watched it just get decimated and just got worse and worse and worse.
Maybe it's still out there. We're missing out. Maybe a caller can tell us how are they getting their local news.
There are a few journalists at both those Sentinel and the Post. I don't read the Herald at all. Okay, I just don't. It's too far south, and actually, it's probably the best of the 3. But I just don't keep in touch with the Herald. But the Sentinel and the Post, there's still a couple of really good reporters that were around when I was around, or new ones that are so good that when I read their stuff, it's like, wow, that person's old school. They're cut from the old school.
Mhm.
But now I went to the Sentinel, Mike, a couple of years ago, and
to their offices.
yeah, to the
Mhm.
downtown office. It was so creepy. You'd go into the editor's room, and they had a TV that had an algorithm of every article that was live on the internet at that time from the Sun Sentinel, and it would be an algorithm of each article of how many people were clicking on it, how many views over a period of time. And if you weren't doing good, if your story wasn't doing with that algorithm,
You're in trouble.
they'd come back to you and say, "Hey, you're not cutting the mustard." Didn't matter that the information was accurate or important. If the people weren't
Wasn't
reading
grabbing
it,
the attention.
if people weren't reading it, they just like the audience doesn't want that. Quit writing about that. And
But
I'm like,
if
really?
if I were one of those reporters, I would say, well, why don't you make it easy for people to access it instead of putting it behind this
paywall.
the
You,
Yeah.
you tease them, you
Yeah.
let them read a paragraph, and then you offer a subscription to them. And then how many people go through that process? Which is that's how we got to started talking about this, right? Like you
Yeah.
ran into a paywall on your creepy
Yeah,
crawly.
exactly.
Can you give us just the first paragraph at least?
I know, right?
Like,
Right.
You know,
It's so crazy. And the other thing about that is that if they were smart and they understood the new industry when it was coming, because I saw the writing on the wall, that's why I got out. Most of my colleagues got laid off, right? They got severance packages and left. I created my own path. I saw what was happening. It's like, you guys are dinosaurs. You're handling this really stupidly, idiotically. And I'm getting the heck out of here because I know one day you're just going to come to me. It's like, you know what, Jim? We don't need to write these big, long investigative pieces anymore. Give me fluff. And I don't want to do that for a living. You know, I want to
Send
be,
you out to cover the Groundhog Day.
when they came to
event.
me,
Best
when
movie.
the year I left, they actually said to me, you know, Jim, you're writing all these big investigations. I was winning state awards, national awards, getting things done, stuff turned into the Library of Congress. Remember we went to Washington, D.C.? My stuff was in Library of Congress, but I didn't know you had to ask months in advance to get it.
Oh,
Remember we went up there?
you went to look for it. Yeah.
I went to look for it, and they said, oh, no, you have to wait. There's like a 3-month waiting list for your request, so I didn't get to see my stuff. But we were doing all that stuff, and they come back to me, and they're like, you know what, Jim? We don't need all the investigator stuff anymore. Why don't you read the wires about Christy Aguilera and Britney Spears? That's how long ago this was. Yeah. And just write little carpy things, like little short carpy things about that. And I looked at them and I'm like, I didn't become a journalist to do that junk. I mean,
you went to journalism school, didn't you?
Yeah. University of Florida. It was one of, yeah, exactly. So it was in the top 4 journalism schools in the country. So I was just like, I'm out of here. You guys don't know what you're doing. Then if they understood how internet worked right, and they took the time to understand it, they didn't have to do the paywall wall. They just had to give a lot of content that would draw traffic, and you would make money just like all the influencers, right? Making money by the amount of views they're getting and the people going to their stuff. And they can make money off of that.
That's
right?
where people are getting their news today, through sources like TikTok and things like that. There's a lot of journalists that's their job. That they live and breathe on that platform.
So it's just really frustrating when you see all that happen. I know that we went way over and we didn't talk about creepy quitters. Thanks for giving me filler, Mike. I know you
did
did
we
that
fill up
just
the
to
time,
do that.
okay?
You did. I knew you were doing that.
Listen, if you want Jim to talk for a little bit, just ask him about back in the day.
Yeah. It's like back when I used to walk both ways uphill,
right,
in the snow.
Did you because I know that this person probably means a lot to you. Liz Corantes is.
Yeah, she just retired, right?
She's retiring from CBS 12, and a name that's been in the business for a long time. And you want to talk about investigative reporting back in the day, the old school, the way that it kind of should be done.
She's an old school, definitely old school. And you know who I just saw on the West Coast about foreclosure market was Eric Glasser.
Oh, no.
Do you remember Eric Glasser was here?
Yes.
And now he's out in Tampa, doing his thing in Tampa. And you know who else I saw? Remember Steve Wolford? He was one of the main actors.
I remember the name.
Yes. One of the main anchors down here, I think, for Channel 5 and Channel 12. Okay. He's now an anchor out in Las Vegas.
Oh,
and
no
he's
kidding.
been there for a long time, and he's a Las Vegas anchor out there.
Excellent.
So there's still a lot of old school guys out and women out there, but a lot of them, because I'm old, so they're all starting to retire now and everything. But let's go ahead and do a break.
That was a little bit of a shout out there. We have a caller on.
Oh, I
right
didn't even
now.
know that. I'm sorry.
And it's Greg is on the line. He wanted to give a little shout out to the whole team here, including Chris. Hey, Greg, welcome to Florida Talk Real Estate. How you doing, buddy?
Hey, good. Good morning, guys. Hey, Jim.
Hey, Greg. I'm sorry that we've been playing phone tag so much. I promised to call you after the show today. This is the father of Lizelle, and then, of course, Albert.
Yep.
And Greg called me, just reached out to me. I think it was a week and a half ago. He said, my kids need to do a rental. Can you do that as like a course for you guys, a course? And then we got him over to Chris, Greg, to make sure that we could do everything in a timely manner. And then now it looks like your kids are buying a property, it looks like, at some point, right?
Yeah, I know they're really close. I just wanted to do a shout out to Chris and hey, thanks for all your help. The kids love working with you. They really enjoy it. We appreciate your patience. They do as well. You've been great with them, and I know you'll help them find the perfect property. So Diane and I just wanted to say thank you to Chris and the team for helping them out. But Chris, you've done a great job with them so far, and they really appreciate it. I mean, you're dealing with a mini Diane there with Lisa, with our daughter. So it's, and Jim knows where I'm going with that, but she's got a lot of questions, always, it's a huge decision, right? Buying the first home, and so it's huge for them. So they're very stressed, and I think you're definitely helping them with their stress level. So we appreciate that.
Fantastic. That means more than I can let you know about. It's been fun working with them. They're great. Looking forward to handing them their keys to their first place for sure.
Yeah, and I remember when we had the initial conversation with Lisa specifically, she was like, "Holy cow, I got to wrap my brain around what we're doing here. Like this switch to house hunting mode and getting into what I would call like the serious house hunting, which is not just window shopping, but you're actually boots on the ground looking at homes." And I remember her commenting something like, I have to switch modes here. Like, what's going on? I have to get into this mode.
And the reason why Greg called us to help their kids is because Greg is a seller buyer. Greg and Diane were seller buyers, so we helped them sell their house in Coral Springs area, and then helped them move up to Boynton so they could be closer to the grandkids. So you're still happy in the Boynton area, right? Last time I talked to you, Greg, you and Diane loved it. Are you still happy over there?
We are. Yep, we are. We've been here just over a year. We love it. Jim did a phenomenal job for us on our deal. Just like I know we listened to the show this morning and heard Chris's story, and very similar. We were homeless for 30 minutes only, so it wasn't that bad.
I mean, we do have in general, we have an anti-homelessness policy.
Yeah,
but I guess Jim breaks
30
those
minutes.
rules.
I screwed up for 30 minutes.
I tell you, it was the most stressful 30 minutes I think of our life. We were at in a hotel room. Both of us had our computers up and going, and we were bugging the heck out of Nancy. But I tell you what, the team, this team here is amazing. You guys can do anything as far as real estate goes, as far as we're concerned. So, but we're really happy in our new home. Diane is now the treasurer of our HOA.
Oh, that's awesome.
Make sure that, yep, she ran, and she's now the treasurer. So she's going to make sure that our HOA is very strong financially.
Make sure that investment, protect that investment.
Yeah, Diane is very detail oriented, so your community is very lucky to have Diane to be the treasury, because a lot of people aren't. I'm not making fun of that. I'm being serious. That's a really good thing. And
I kind of joke with people sometimes when they're buying in HOA communities and they start talking about what are we getting for this money, and look at the budget. If you really want to be influence that, all you got to do is just get on the board, and then you can run things. And I'm like joking with people, but here we go. Diane has
be careful what you wish
Diane
for.
decided to. She's like, I'm going for it. I want to be in control.
I remember poor Diane
influence.
when she was in the studio. They came into the studio to talk about their experience, and poor Diane, she was sitting in this chair. And the chair kept sinking. You know how it has that hydraulic lift thing, and she kept sinking lower and lower. And then she'd adjust it, and then over time it would just sink again. And at one point I said, Diane, why don't you move your chair up and put your chair up? And she's like, I haven't, it's broken. And Ross goes through that once in a while. That must be the chair Ross uses once in a while. But we're really excited to help Liesl and Albert get the home. Are you surprised about the down payment? Because when Greg and Diane bought their home, obviously they weren't first-time home buyers. They really couldn't deal with the down payment assistance. Are you surprised about how much down payment assistance is available for the kids?
Yeah, we were. That's phenomenal. I mean, it's when she talked to us about it and kind of filled us in, we were very, very happy about it. But yeah, we were very surprised.
Yeah, it is a lot of money, and
great.
people don't think about it, that it's a lot of money.
Absolutely.
So, Greg, I really appreciate you calling. Say hello to Diane. Take my call when I'm driving over to Lake Okeechobee in a little bit so we can catch up. Is that okay?
Will do. Love to. Yeah, I just want to call real quick and say thank you for everything. Thanks, Chris. Great job.
Really appreciate it, Greg.
Awesome.
Thank you, Greg.
All right. We'll talk.
I think
We'll talk to you soon.
I think that's two people you have to call now, Jim, on your ride.
Greg and Diane, and then who's the other person?
I don't know. Didn't he say earlier he had to
No,
call
I was going to
somebody?
call Greg. I
Okay,
actually said that. That's what I said. I was
Ah.
going to call you later when we were doing shout outs for Liesl and
All right.
Albert. So.
Well, Jim's going to have an opening if
Yeah.
anybody wants to call
Yeah,
him.
right. There you go. Yeah. So actually, it is a good time to call me when I'm driving around doing all that. I'll be driving around for like 3 hours.
Yeah,
straight,
you
so
don't
if
even
wanna
drive,
catch me-
right?
Well, yeah, I have my car driving.
The car driving.
Yeah.
Okeechobee, here we come.
Yeah. I got a ding in my car for the first time. Somebody dinged me.
Oh,
I was upset.
like a door ding?
Yeah,
Or
door
somebody
ding.
hit you while they were
No,
moving?
door ding. Thank God I didn't
So
get
your
hit.
car was not moving.
No, I was parked and I didn't see it for.
So it's got no
goodness knows.
defense against the shopping cart door ding.
Actually, that car has a Sentry mode, and if I turned it on, it would have set off an alarm and everything, and it would have filmed it. And I just I didn't have the alarm set.
Didn't get it. I was going to ask if they got it on camera because I know that those cars have a gazillion cameras on
It
them.
might have been, but I don't know when the ding happened. It might have happened days earlier.
Okay.
And then when I saw it, I was bummed out. But I know it was a white car because there was a white paint chip on my car. But it erases. It always is recording, but it erases, I think, every 24 hours or something.
okay.
So I missed out on it. But if I put it in a different mode, it would tell me anything that's happening all the time, but then it eats up the energy. So I don't like doing that all the time.
I would say it saves the videos. Then
Yeah. Isn't that pretty
under
wild?
certain circumstances.
If something happens, I just found out today, I was watching a little YouTube video on the way over here. If you had an event happen or got into a crash or something, if I hit this one button on my steering wheel during an emergency, it will save the last 10 minutes of your driving. Isn't that crazy that it films
wild,
everything
man.
when you're driving? It's
Like
so
the
crazy.
little black box.
Yeah.
as they,
And I'm
say
up
it.
to 82% car drives me, 18% I drive the car.
Mm.
And I drive about 2,000 miles a month. So think about that.
That's
Pretty crazy. He's
Mm.
driving me like
Testament for
1,600 miles.
I've seen you
16,
drive. I think
1700.
I prefer
Probably
the Tesla.
safer.
Yeah. No.
Well, actually, that happened. It's funny that we'll wrap up with this because my sister would 100% agree with you. We were driving up in North Carolina, and I had the car self-driving me, and she kept saying, "Jimmy, are you driving or is the car driving?" And I kept saying, "The car's." She had anxiety, right? So I kept saying, "The car's driving, car's driving." And she would go. At first, she went, "Huh," and then after a while, she kind of liked it. And then one time we were driving up this curvy mountain. She goes, "Hey, Jimmy, are you driving or is the car driving?" I go, "I'm driving right now." And then she paused. She goes, "Let the car drive."
She could tell the difference.
Yeah, she knew. She could tell in the back seat who was driving the car. I was like, kind of funny. But we're going to go ahead and take a little break. And then on the flip side, we're going to talk about other people's money. Now, we've talked about this before about it, but we're going to go into the 3 different buckets, if you will. Seller credits, down payment assistance programs, and the Smart Start, which is running out of money. So you want to call now. If you're a buyer, you got to call now and see if we can get you some Smart Start money on top of everything else. But we're going to go into all that and understand how you can use the money. And the reason why we're talking about this, for the last 4 deals Mike did, he had too much money. And his big headache wasn't about, can they get the loan? Are we going to close on time? It's like, what am I going to do with all this money? I don't want to leave money on the table. We got free money. How are we going to use it? So we're going to talk about that on the flip side.
One of the great things about Greg's phone call there was that he highlighted the team of pros that Florida Talk Real Estate is. Jimmy and Mike and Chris now with the team. Ross Camaronets with Brightway Insurance, Juno Beach. This is a well put together team, and that's what the kind of service that Greg got, and you can get it too if you go to floridatalkrealestate.com. By the way, you know what else that Greg did? He called 877-927-6969 and got involved with the show. And if you want to do that, you can do that right now on Real Radio 92.1 and 101.7 on the Treasure Coast.
The visual aid you need for all the freaky stuff we talk about on the radio. Find it at realradio921.com. Here's what's happening with the weather on Real Radio.
I'm meteorologist Charlotte Carl with CBS 12 News. Heat and humidity continue to remain a big story through your Saturday afternoon. Feels like summertime out there, but we're not necessarily seeing that summertime shower activity quite yet. A few spotty showers in the forecast this afternoon. Tomorrow, a few more storms after lunchtime.
This report is sponsored by Aleve. At some point, body pain may creep in and become your reality that day, but Aleve is here to keep you moving. One pill gives you up to 12 hours of body pain relief. So don't let pain hold you back. Try Aleve today. Use as directed.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's right. We are live, and happy South Florida, everybody. This is the Florida Talk Real Estate Show, the #1 information provider about all things real estate in Florida, right here every week, every Saturday, 9 to 11, live for almost 14 years now. I can't believe it. You know, Mike and Jimmy, we are the oldest non-iHeartRadio backed show, if you will. Meaning like
we're not paid talent.
Yeah,
we're just talent.
Yeah, we're the longest one. And you know, for a long time I never thought that we would be because the fishing show was on for so long.
Man, they had a real good stretch there.
They really did. And I thought I liked the fishing show.
Mm-hmm.
I'm sorry to see that had to go. But I thought we would never be like the longest running non-iHeartRadio produced. I don't know. I can't say non-iHeartRadio. How would you describe it, Jimmy?
Well, I don't know. It's probably the best way. Yeah. I mean, paid programming.
But you know what made us different and why we lasted so long? When you hear all the other stuff that's on the station, it's more commercially and it's more sell.
Yes.
Buy this, do that, buy this service, blah, blah, blah. We're really here to interact with our community, our listeners, and to help them and answer their questions and have a good time and joke around and not just, hey, we're here to sell something. This is what we want you to do. So just really blessed to be here for so long. And thank you so much. And thank you, iHeartRadio, for allowing us to be here for so long. Now, we're going to roll right into other people's money and how to use other people's money to buy a home, because we know that the hardest thing for a lot of buyers, especially first-time buyers, is they can have the right credit score, they can afford a mortgage payment for the type of home they want to buy, but how are they going to come up with all the money for the down payment? So a lot of them will just say, screw it. I'll just do first, last, and security again. I'll get another rental place.
Start trying to save up next year, right?
Yeah,
Or
and
maybe
save up.
have a goal.
And then the car breaks down or something
Sadly, life
happens and it's
hits.
just like, yep, and
Yep.
things happen. But a lot of these people, if they can scrape the money together first, last, security, they might be buying a home because the other extra money can come from other people. So, Mike, I know that you've just went through this. I'm so glad we're in this cycle right now where I'm negotiating seller concessions or Chris negotiates seller concessions, and you got that money. And then you have down payment assistance program. And now you have the Smart Start. And you can sometimes what's called stack these, where you can combine them all together and use it. But you can't use all the three different things the same way. So, Mike, how do you deal with that? Could you explain first, what are the three pots of money that people can use? Not including things like gifts and stuff, Mike, okay?
Yeah.
Just the three we talked about.
A good distinction is like, what is your money and then what is other people's money, or what we call interested party contributions, or IPCs. So instead of OPMs, it's IPCs, right? Interested party contributions. So your money would include your own funds, gift funds from eligible gift donors, such as family members, loved ones, down payment assistance funds, or community lending kind of initiative funds usually fall into the eligible for down payment category. So it's kind of considered your funds. Interested party contributions are things like seller credits, lender credits, real estate agent credits. Like, I mean, you've been in deals before, you basically had to kick in a little bit of your commission, for example, to help bridge some gap.
During short sales, I had to do that a lot.
Yeah. And so parties who are interested in the transaction and the completion of the transaction, they're in that category at IPC. And IPC money cannot be used towards any part of your down payment, whether you're doing a minimum down payment, 3.5% on FHA, or maybe 3% or 5% on conventional, or if you're doing 20% down conventional. That money has to come from your money, not from IPC.
Well, but it can come from the Florida bond program.
But remember, the DPA programs are your money, right? They're in the category of your money, not IPCs. Because the Florida housing, those community lending and down payment assistance, it's called down payment assistance. They're not an interested party to the transaction, right? They're basically there to help you.
The community good.
Yeah, do the community good, and also just help with the cash requirements, which is the challenge that we're talking about. So that money can be going toward your down payment, but IPCs or other people's money cannot go towards your down payment, which is where we run into the challenge. So if you have Smart Start has really been part of that. Smart Start, even though it's a community lending initiative, it's private from the mortgage firm, and it can't be, and we are an interested party, it can't be used towards your down payment. It can only be used to cover closing costs. And when it was $15,000, I mean, that is almost always enough to cover what I'll call closing costs and prepaid items. Prepaid items, probably the difference there, like closing costs are, you have companies providing services related to the transaction. So your lender, the settlement company, and then the government, there's taxes, things like that. They charge for whatever it is, and that's a closing cost. Prepaid items, the biggest ticket item in that category is your first year of homeowners insurance, right? That's a multi-$1,000 bill that is not a closing cost. It's just something you're required to have, but you're paying for that service. So we call that prepaid items.
And your taxes.
Yeah, and like escrows for property taxes and homeowner insurance, and then there's like the daily interest on a loan. We call that a prepaid item. So
HOA or condo fee.
That can be in there. Yeah,
Right.
sometimes, a lot of times, regardless of like how it's one of our techniques that we're going to talk about is like directing some of this extra money towards HOA. It's like kind of like prepaying your HOAs. But even if you didn't have that, a lot of times HOA communities have what's called a capital contribution fee, which is kind of like a get into the club requirement, some amount of money, and then oftentimes they will collect 1 or 2 months of the HOA per the instructions from the association, which is like any new owners, we want to make sure that they've got sufficient funds, so we ask you to collect 1 or 2 months HOA dues. So those are also closing costs and prepaids. Essentially, is where you can direct other people's money. And if you run into a situation where you have money from the lender and money from the seller, your limit on how much you can use is like the total of your closing costs and prepaid. So that's where you run into the challenge of too much money. It would be great if you could just say, "I'll just throw it towards my down payment," but you can't.
But you can't. You're not allowed to do it.
Not allowed to do that.
So if you don't figure out how to use it, so let's say that you collected $10,000 for the down payment, right, through a down payment assistance program, but then you needed $15,000 for the closing costs and prepaids, and you got $15,000 from Smart Start, but then the realtor negotiated with the seller to get $5,000 back from the seller. Now you have $20,000 plus the down payment assistance.
Yeah.
And the $20,000, but you only need $15,000 for the closing costs.
What do you
in
do
this
with the
example.
extra
What do you
$5,000?
do with the extra
Yeah, and you
$5,000?
can't put it towards down payment. Like the down payment assistance money you're using towards your down payment, you could use it to cover closing costs, down payment, whatever it is. But if there's extra, you just throw it at the down payment, right? You just borrow less money essentially. So yeah, you got $5,000 extra. What do you do with it? What are you going to do with it? You can't
go to Vegas, baby.
Essentially, like the natural place that you would use that is you essentially increase the costs on your loan. How do you increase the cost? Well, I could up my fees. We have an opportunity, Jim. You could charge an extra commission. The settlement company could bump up their cost. That's one way to increase the cost. But the natural way to increase the cost is to buy down the interest rate. So you got extra money, you throw that money to, it's as points, origination points on the loan that buys down your interest rate to a lower number. Therefore, it's a benefit. You're using the money that you couldn't use otherwise, and your payment is lower.
Didn't
as a
you
result.
do one where you really got it? You got it down almost a whole point recently. Was that you? I know I talked to somebody.
Sure.
It went down to like 4.8 or something.
Yeah. So Smart Start was a great example of like where you could really use that. Let's say you had enough money on your own, but you just like you're getting this free money. What's the best place to direct it? Buy down the rate. And $15,000 to buy down an interest rate is a huge.
That's a big.
It's a huge
to get to 4 in today's market. High fours.
It might not get you down that far, but it's the nuance. It's probably a 1% of your loan amount buys down the rate about 0.25%. So if you pay 1%, let's take a $400,000 loan amount. So $4,000 would get you from say 6.25 to 6%, right? So that 1% fee is buying down a rate. So if you have 15,000, you're
that's like
almost getting a full,
that's almost
yeah,
a whole
almost
point.
a full interest rate lower. So
and
it's huge.
And that's locked in for the life of the loan. It doesn't. It's not like
it's not a temporary. It's not a temporary buy down. It's not like the 3-2-1 buy down that was kind of trying to be popularized a few years back. But yeah, it has created a challenge where we just have too much money. You had one last week. We talked about it. You had negotiated, $24,000 of seller credit, which is. This is one of the nuances. It was within the limits of what you're allowed to get from an IPC. So all these loan types will have a limit on how much you can get as an interested party contribution.
Right. You can't get $50,000.
Yeah, exactly. Right. Because FHA, the limit is 6%. For conventional loans, if you're doing low down payment, it's 3%. But as you get more like 10% down to 20% down, it gets higher. And it goes actually as high as 9% on a conventional loan. But you're going to run into this space where, because you can't use that towards down payment, you can only use it towards closing costs. You've negotiated too much money. Yeah. And I think I said this last week, Jim, I don't expect real estate agents to like keep that top of mind. The one thing you have to keep top of mind is there's a cap on what you can extract, right? So you have to know the IPC limits at some level, or you have to know somebody who knows. Right. So just call Mike. Hey, we're trying to do a credit. What's our limit? What we can do?
I actually negotiated the deal. Mike was talking about 25,000. And then when Nancy and Mike got involved, the next thing I know, it was 24,000. I'm like, how come we only did 24? And then Nancy's like, Mike said, that's all we're allowed to use. We're capped out at 24,000 on that.
6%. Yeah, it was 6%
so I was like,
on
how
your
come we're
400?
1,000 short? We didn't need it. Right. We had too much money. But but
So-
there is a cap.
So I would say I don't expect you guys as agents to like be in tune with exactly what's going on. And I would say I use the word extract. I'm like, extract as much money from the seller as you can to use towards our deal. Because our question is, all right, we need this much cash. Where's that cash coming from? If you're able to get some money from the seller, absolutely. Sometimes it's necessary. Sometimes it's a luxury, right? Like, hey, I got it. I got this money to use. And so I would say just do your thing, get as much as you can, and then we'll figure out how to use it. But sometimes you got to get a little bit tricky because you've exceeded the closing costs. So what do? You have to increase the closing costs. That's one way. If you're doing down payment assistance, you can't buy down the rate on those programs. So you have to come up with some other way, which is how we land on some of these other options like prepaid HOA.
So explain that. So in down payment assistance, when you get down payment assistance, you can't buy down the rate.
That's right. So unlike the normal market where you kind of, when you're locking in your interest rate, you're not like, you're kind of choosing a rate, but you're not locked into that specific rate. You're locked into that date and times chart.
Mm-hmm.
And you can kind of slide up and down this rate versus points situation. And you can move up, take a lower rate, cost you more money, take a higher rate, cost you less money. So that's why you can kind of maneuver on that in general, is because you're not locked into a rate, you're locked into a chart, and you can move up and down the chart as needed. So what was
but with down payment assistance,
so those programs, you can't do that. You're basically, the rate is the rate.
It's locked in. You can't do it for buy down.
Yeah.
So in one of the cases we had, you actually figured out a way where you paid HOA fees in advance.
Yeah. So
the buyer that was coming in, they didn't have to make an HOA payment for a little while because.
Yeah, you don't want to leave. The worst case scenario is you've negotiated this money and then all of a sudden there's no way to use it. What do you have to do? Well, maybe you do a price reduction, or maybe just it gets contentious, and the default will be, okay, well, you can't use the money. Like, it's just, we're lowering the seller credit. You've maxed out, it's too much, we're going to lower the seller credit. Well, that's going to feel pretty terrible, especially after you've already extracted it, right? Like, you've already gotten them to agree.
It's like you're giving a refund back.
Yeah,
So
exactly.
one of the techniques that we've used is like, okay, well, how do you get more costs kind of on the closing disclosure? Well, what if you collect advance HOA payments? So, 3 months of HOA or 6 months of HOA. You had kind of the funny question of, well, I got $10,000 though. That's 2 years of HOA. And you start to get into this weird territory where you're really, that's like not bending, but more of a breaking of the rule. Like,
Yeah.
But so there's got to be some, like, what's possible, what is your underwriting staff going to allow, which actually goes deeper to when the loan enters the mortgage-backed security world. And it's kind of like, are you within Fannie or Freddie compliance, right? Are you a conforming loan? And so you have to, that's like behind the scenes, post-closing, those are things that underwriting is responsible for kind of ensuring. So there's some limit of what you can go on that. I think probably the max I've done is something like 6 months, 6 months of prepaid HOA, which is, $300 a month is,
That adds up.
$1,800.
And you're actually giving that money to the HOA or is it set into account aside that you can pay it
Oh,
each
I
month?
see what you're saying.
Yeah, so it's
Just
actually,
curious.
it's going to go to the HOA because the mechanism is anytime there's a closing and there's an association, they provide what's called an estoppel letter, the title requested, they provide an estoppel. That basically says, here's the HOA's books on this particular home. The sellers owe this much. The new buyers are going to owe this much. This is what we expect as the association related to this transaction. And so there's always some money that's going to the HOA from the closing. Title is collecting it. One of the title's role is to collect all money and disperse all funds. So title is going to be dispersing to the HOA if there's an HOA usually. So it's just like that number is going to be bigger. So the answer to your question is yes, it goes into the HOA account. And so I start my new home journey with basically a negative or a credit balance with my HOA.
Yep.
Which is good. I mean, that's
Sure.
not instant money in your pocket, but it's definitely money in your pocket. It's a bill that you don't have to pay for X amount of money.
Well, it's great too, because when you buy that home, you have all those other intangible expenses that you're buying stuff for the property, this, that, and so having a little bit of a cushion where you don't have to start contributing, out of your own pocket, the HOA fee, that's a huge benefit especially for first time home buyers.
It does help a lot. This is this just reinforces why it is a good time to buy right now.
Mhm.
I know a lot of people out there are sitting on the sidelines because they think that they're waiting for the other shoe to drop on the economy or something, and they don't want to make a mistake. We're going to get into a little bit about the Fed Reserve in just like 2 minutes, and we're going to explain why um, you should be concerned about other things and not just about what would happen if that happens. But right now, even though inventory shrank a little bit since our peaks about 4 or 5 months ago, there's still a lot of motivated sellers out there who need to sell. Not everybody. There's a lot of houses on the market that are never going to sell and they're just overpriced. I had my first expired listing last week for
You
I
were in
think,
that group?
18
Overpriced?
months. I was overpriced and I told him over and over again,
Mm.
it was a Century Village condo and he was way overpriced by 30 grand. And that's a lot of money in
Yeah.
Century Village.
And at that price point too.
And we did get showings and stuff, but nobody wanted to buy it because it wasn't a super maxed out a unit. And he was asking for a super maxed out a unit price. And he just thought, I'm on the first floor, so that's going to make up everything. And it does help being on
Yeah.
the first floor sometimes, but not enough to make up the difference in the price. And I once I took that property, I was like, I'm probably not going to sell this unless he changes the price. So when we came to the end of the listing last week,
Did you have a sign in the yard at least?
it's a
Right, that's how
condo,
Chris
yeah.
found you.
Yeah,
Can't do it.
exactly, right? So we had to basically, I called him up and said, hey, it's expiring today. And he's like, yeah, I'm not willing to drop my price. And I said, I totally understand. I'm not going to ask you to, but I don't want to be your agent anymore either. So I don't even think he's putting it back on the market. I think he's going to keep it for a while. He's from up north and he comes back down and back and forth from
So you're like,
for
you're
vacation.
not firing me. I quit.
No, it wasn't a bad we didn't have a bad conversation or anything. It was just like he wants what he wants and we
Yeah.
can't get what he wants in today's market and we tried.
I had the same thing happen a couple of times this week where we looked at a property and then it was like, is this bad karma or something? Because it got pulled off the market literally within hours of looking at it. And one of the properties, we were able to, I talked to the agent. They were just in the process of going to pull it off the market that day, and convinced her to let us go look at it. It wasn't it ended up not being the right property for them, but at the same time, the seller decided that they're going to take it off the market. They're going to reinvest into it, fix it up. They were going to spend, like $45,000 on some renovations and then either rent it out in the future or turn around and sell it. So that's happening.
You should
a
have
lot.
told them about Seller's Edge and said, hire us and we'll give you the money to fix up the house.
Yeah.
Do you come across sellers who are kind of in a exploratory phase of like, you know what, let me list it and see let's see what we get, because if we don't get what we want, we're going to change it up. We're going to reinvest in the home. We're going to rent it out, turn it into investment. Like, are people doing that?
It was more common when we had that crazy COVID rush.
Oh, because they were just getting way above.
And then afterwards, right after the rush, people were, because, they're behind the times, so they're not up to speed on everything. And they were like, oh, let me try now. But a lot of those people, I call it the buffalo herd because they're too late. They should have done it. If they did it 6 months earlier, they probably would have got the result they wanted. So people do that. It's not as common now, Mike. But there are a lot of people, I think it's more than 25%, but less than 50% of the houses that go on the market don't sell in the South Florida area.
Really?
Yeah. And people say that all the time. I used to say 25%, but at one point it hit 50. And I was like, wow, that was even surprising
Where
to me.
the listing either cancels or expires.
Canceled or expired before it sells, and they just not getting the price they want. So there's a lot of people throwing spaghetti against the wall, and you really got to find out which ones are motivated, because if you get the one that's throwing spaghetti against the wall and you have a serious buyer that wants it but doesn't want it at that price because it's overpriced, seller in that case is not going to work with them. But if you have a real seller that really wants to get the property moved, they're going to work with you as long as you're being reasonable. So this is a good time to buy. I have a bunch of people that are sitting on the sidelines right now because they think the economy is going to shift negatively in real estate. And if that happens, the problem that they have is a lot of these people are seller buyers. So you're always going to get a little burned on one side or the other if you're in a seller buyer. If you're in a buyer's market and you're selling your house, you're going to get burned a little bit about that. But if you do right, you're going to make it
You'll
up
make it up
on the back
on the
end.
back end. Mhm.
Or if it's a seller's market, right, you're going to do really good on the sale. But then on the back end,
You got to
you're
buy
going to
into
have to
the
be a
market.
little more flexible and reasonable on it. But it really is a good time to buy now, as long as you could afford it and you can make the mortgage payment. That's always with us. We're not just buy, buy, buy. We always say, if you could afford the mortgage payment and you want to buy something, you should go ahead and do it. But if the mortgage payment's not there or you feel like you're stretching yourself too much, then don't do it. Just wait and try to put it together.
I think one of the reasons this show, whatever, has the leg is that we're not trying to convince you it's a great time to invest in real estate, right? That's not what we're talking about. We're talking about buying a home where you're going to live for the most part, and it's like the time is right for you. Maybe you're tired of renting, or you need to change your living situation, whatever it is. So when Jim says it's a really good time to buy, he doesn't mean it's a good time to be a real estate investor on the buy side.
Right,
That's not
that's
what he's
true.
saying. Not that it's not a good time. I don't know.
Right.
But that's not what we're talking about.
Right. We're talking about regular people that want a place to live, to raise their family,
Right.
have family gatherings or personal gatherings at the house, watch
Or
a
they're
Super
finally,
Bowl.
the family's gone and they're ready to like take the next step.
Yes.
Either downsize, sideways,
Yeah.
location, whatever it
Mhm.
is. Yeah.
The way I like to describe it to people is, investing in the stock market and things like that. You never time it perfect, right? You're never going to sell at the absolute peak, nor are you ever going to buy at the absolute bottom.
Might
Same
get
thing
lucky.
apply. You might get lucky once in a while, yes, but that's the reality of life, is you're never going to time it absolutely perfectly. So that's where falling back on, why are you doing this? You have the right motivation, and if you've got the right timeline in mind, you'll do fine.
So let me switch over to a subject that I think is related to this. I don't know if you guys have been watching or listening, but the Fed Reserve, the board, has been really giving very strong hints that instead of rate cuts this year, it might be rate increases this year. And it got so bad that they had a testy meeting last week where some of the board members were actually saying, hey guys, we got to tell the public that we might not even be thinking about rate cuts. We might be thinking about rate increases, because everybody right now is under the perception they're waiting for the rate decreases that were promised this year. And when I say promised, not by the board, not by the Fed Reserve, it's by all the talking head people that are trying to predict what's going to happen. And there actually was talk that maybe we should kind of set the foundation right now that might not happen, and we might go the opposite way. And it actually turned into a little bit of a tiff among the board members. Some of them didn't feel that way.
Little under promise, over deliver versus the over promise, under deliver.
And what I think is what they're concerned about, the Fed Reserve is worried about, the members that are bringing this up, is that if that does happen and they have to go to increase the interest rates, it's going to be so surprising if they don't talk about it in advance that everybody's going to go into shock mode, and it might jolt the market in a negative way. And I'm not talking about the stock market either. I'm talking about the housing market. So so that got me to thinking, well, what happens? I was trying to think, when was the last time we had the Fed Reserve increases? And I don't know if, other than this group that we did now, but we started in 2018 and we started going through increases all the way to early 2019. And then actually was Powell said, I think I missed it. I thought we were going to go into inflationary era, and he slowed it down in 2019, the rate increases. And then right after that, we had COVID, and that changed the whole game. But and then we went down to zero. Right. So we went from, I think we're going to go into an inflationary period, to like, holy moly, we got COVID. We got to scale it back to zero. So I went in and did a little research. Let me just pull it up now. Just give me a second here.
I don't know if you remember, Jim, but what followed COVID when the Fed rate went to zero for a period of time?
What followed COVID when
in the economy?
Well, we had a boom.
Inflation.
Yeah.
Oh yeah, we also had. Oh yeah, yeah,
So
up
it's
to,
like-
up to 9%. Up to 9%. I didn't get where you're going.
Yeah,
with that,
so
Mike.
Fed
I'm
rate
sorry.
drops to zero for a period of time, and of course, there's everything else going on, including relief on mortgage payments. There was about 18 months or up to 2 years even when people didn't necessarily have to make their mortgage payment.
Mhm.
But yeah, a period of inflation followed that, which
Yeah.
is why we are where we are now. As far
we
as
still
rates.
haven't gotten out of it. I think it's
It's-
still there.
Well,
it's been
the thing that bumps me out is everybody gets they want to inject politics into statistical analysis of what's happening. And if you just looked at the statistics, yes, after COVID we went up to 9%. And it took us a very long time after that, but almost 3.5 years. But we did get it down to basically 2.75 to 3.25%. So we went from
yeah, it came
9.1% down.
for sure.
And they were trying to get to 2, but in my mind, when I started reading all this, 2 was just a number that it's based on stuff that happened a long time ago. And it really, where we were, it seemed like the 2 point, the high 2s, low 3s, things were
feeling okay.
kind of feeling okay. It's stabilized, still a little higher than
Sounds like
everybody
you're
wanted.
trusting your gut on that, Jim.
Well,
Yeah.
or the new we're resetting or hitting the new normal, right? Instead
Possible.
of the 2%.
Right.
That became a
Change
term.
the target from
Yeah.
New
2
normal.
to 5. Well, it's like when we dropped to 5% recently on mortgage rates, Jim. There's a little bit of that too, right?
We're in
'Cause
the fives.
we were at 5.98, but it had a 5 in front of it. So
Yeah.
it's like we got to 5.
We won,
got
no.
to 5. So maybe I feel like the 2% inflation target has a little bit of that. It slipped into 2.99 is still 2, right?
Yeah, exactly. So
Another new normal, interest rates. I mean, normal over 30, 40, 50 years is
Yeah.
what? 6 to 8%.
Remember
So we're
with
right
this,
there.
the headline on this is like there's an affordability crisis in housing, and especially in certain parts of the country, it's expensive to buy a house, and I agree with that. I even in my own lifetime, even though rates have been where they are now, when I think my first mortgage had a 6 in front of it, 6.25, something like that, but the price of the house was way lower.
Was
And
much
so it's
lower.
even though you have the same interest rate, the housing price has come under there's a lot of pressure on buyers because of the payment. But the people are saying we need interest rates to come down to solve that particular problem. And I think what we would point out is that if interest rates come down, a lot of these buyers that are waiting for that moment, who've been on the sidelines, kind of waiting for rates to come down to a level they feel is optimal or comfortable, there's going to be a lot of other people who have also been waiting who are going to be coming out at the same time.
Mhm.
And so even though the rates have come down because of the pressures on inventory, which are inevitable to happen, buyers come out, inventory is going to shrink, and prices are going to go up. So you've made up ground on the interest rate and lost ground on the price.
Yep.
And I think that's inevitably that's going to happen unless you're at the very leading edge of it. And the only way to be at the leading edge of it is if you have talked to a real estate
Professionals,
professional,
right.
you've talked to a lender, and you kind of like have, at the very least, you may not be doing the active house hunting or the serious house hunting, but you could be doing the window shopping version, really dialing in your parameters, really understanding the numbers so that when that house in that neighborhood that you've been targeting hits a price and an interest rate where all those things line up, you're ready to pull the trigger. So you can potentially be on the leading edge of that. But if you're just waiting around, kind of like majority of people are, and like, oh, rates are coming down, you're going to be in the herd.
yeah, and we experienced that during COVID, and we experienced that during the big increase in '03 before the crash of '05, and we went through that all the time.
Mhm.
So this is what I was thinking. I was trying to project what's going on. So the Fed is getting that new chairman, Warsh, right? So when Warsh comes in, the reason why he was appointed is because the president wanted him to reduce the Fed reserve rate, right? But there's a lot of people on the board. I don't know if it's the majority of them, but there are people on the Fed Reserve Board that are concerned that if they do that, it's going to spike inflation really fast. And that's what they're worried about. If they drop the rates, it's going to super spike inflation. And we've been seeing inflation going up.
We already have inflationary pressures outside of that.
Yes,
for
and
sure.
we've already been seeing it for several months in a row. It isn't just a blip. This has been a continuing trend. And now we're in the mid threes. Remember I said 2.75 to 3.25? Now we're in the mid threes for inflation. So we're not going down. We're going up right now. And everybody knows this affordability, blah, blah, blah.
Which is why you're hearing the undertones from the Fed saying, hey, we might have to not lower rates, we might have to bump rates.
Right. Now, we did have a little glimmer of hope that things aren't as bad as they could be projected to be in the future. And the fact that the jobs report came out yesterday and we had 115,000 jobs created. And we had the unemployment rate held at 4.3%. 4.3% unemployment is awesome. No matter who, forget about the politics. That's an awesome. If we ever get to 7-8%, right? If we ever get to 7 or 8% unemployment, we're going to have a big problem nationally, economically. So this 4%, it's so sweet, and we've been there for so long. We've been at this 4% for so long, and it's really nice to have that. But if the inflation gets really bad, this is what I was thinking. So let's say they do drop the rate, and then we do get a spike in inflation. And the only way that we're going to be able to stop that inflation from continuing to grow is to really jack up the rate. So then I was thinking, okay, we're at 3.5% right now. What would happen if we got to 6%? What would be the mortgage rates of the Fed Reserve jump from 3.5% to 6%, which I feel would be like the worst case scenario.
Pretty extreme, yeah.
Yeah, that would be, we're in a pretty bad time at that point. So I did some research on it, and this is what I found out. We've been in the 6%, roughly 6%, 3 times in the last 30 or 40 years. Early 2000, we were at 6%. This is Fed Reserve rate. Late 1994, when we had the dot-com bubble stuff happening, we were at 5.5 to 6%. And mid 2006, we were at 5.25%. This is right when we were in the middle of the crash, right? The first crash, not the COVID crash. So what were the interest rates? So early 2000, when we were at 6% fund rate, the mortgage rate was between 8 and 8.6%, right? So that's what we'd be looking at if we get up to that level.
So it's kind of like a 2-point about a tether.
According to the research I did, it's 2 to 3 points above whatever the Fed Reserve rate is, but that's a big difference, 2 points or 3 points. So it isn't that exact, right? And also, so it isn't just a matter of how high the Fed Reserve rate is, but where we are in the economy. Is the economy getting better? And we're getting, if the economy is starting to get better, but we have the high Fed Reserve rate, we might be closer to that 8%. But if the economy is doing really bad and we have the high Fed Reserve rate, we might be closer to 8.5%, 9%. So in late 1994, and that's the year I bought my house, my first home ever in Delray, the Fed Reserve was 5.5 to 6% in 1994. Interest rates for mortgages were 8.4% to 9.2%, right? So that's what I paid, was 9.25% for my house back then, because I had bad credit too, right? So I paid 9.25%. I paid 9.25%. With the interest rates going to 5 or 6. I tell you what, since we're running out of time, next week we are going to talk about what would happen if we only had a 4.5% Fed Reserve rate, and what would happen if the reserve rate stays stable. So we'll talk about that next week. Everybody, I hope you have a great weekend. I know we're running out of time. Chris, thank you for coming.
Pleasure being here.
Yep. First time, did pretty good. Yeah, we think he's going to come back. Mike, I hope you have an awesome weekend.
Yep. Enjoy the weekend, everybody.
Timothy,
stay cool.
I hope you have a good weekend too. I'm going to try to stay cool. Too cool for school, and I'm going out to Lake Okeechobee. So
you going swimming, boating?
We're going to look at a motel restaurant that looks like the Psycho place from the movie Psycho, and I'm going out there. We're selling it. I'm going out there to meet a buyer today.
All right.
Do they have lending?
Huh?
Do they have finance?
I think it's going to be cash for this one.
Okay.
Yeah, so I'll let you know. Okay. Anyway, I hope everybody has a great weekend, and happy South Florida.
We're everywhere you need to be. Find your favorite show at